Today our topic is how to identify and record credit transactions. So first we should know what do we mean by actually credit transactions. Credit transactions means transactions in which payment take place later on. Suppose we sold goods but customer will pay us later on. Or suppose we brought goods but we will pay to the supplier later on, not now. Immediate payment will not be there. So if in the question suppose credit transactions are given, so how we will identify that the transaction is on credit basis or transactions are on cash basis? So we should identify that, and after identifying that we will record the transactions accordingly. Okay, see, there is a rule, and the rule is what? That if in the transaction name of person is mentioned, understood? If in the transaction name of person is mentioned, it means that is credit transaction. Now see first transaction here we have sold goods to Mr. John, understood, and $6,000. So here we know the name of the customer to whom we sold the goods. So it means it is credit sale. We sold goods to Mr. John but he will pay us later on, understood? So what is the rule? If in the transaction name of customer is mentioned, it means that transaction is on credit basis. Let's take one more example. Suppose like this, if suppose in the question it is given like this: sold goods for cash, $6,000. Now this is which transaction, cash or credit transaction? This is cash transaction because clearly mentioned cash and nowhere the name of customer is given, isn't it? So this is cash transaction. But if in the question name of customer is mentioned, like here it is mentioned sold goods to Mr. John, we know the name of customer, it means it is credit sale. Now see how we will record this credit transaction. Now first you tell me what happened in this transaction. See, there is a revenue in the business, we sold goods, isn't it? So we made the sale, so sale is there, and sale is our what? Revenue. And we got money, or we will get money in future. Right now we are not getting money, so from whom we are to collect money? Yeah, so we have to record the name of Mr. John also. So we made the sale, so there is sale. Sale is our revenue, and we have to collect money from Mr. John. So we have to write the name of Mr. John also. Now tell me, sale is our revenue. Revenue increased or decreased? Increased. And what rule says that increase in revenue we have to credit, and increase in revenue means credit. Okay, and Mr. John is what? Mr. John is our account receivable, or you can say trade receivable. So Mr. John is our asset, and assets, Mr. John is now account receivable. Mr. John is my asset. Now there is increase in asset or decrease in asset? Increase in asset. So increase in asset, what is the rule? Debit. So we will debit Mr. John. Understood the rule? Now accordingly we will pass the entry. Now suppose here see date is not mentioned, so we are assuming the date 2014. Suppose we sold goods on January 1st. So first we will write the date. Now as per this our analysis, we have analyzed here, isn't it? So which account will be debited? Mr. John's account. So first I will record the debit item, see Mr. John. Now which item will be credited? Sales. Now I will record the credit item sales. And what is the amount? $6,000. Now see the next transaction. What is the next transaction? Sometimes suppose like this also question comes in the exam. Sold goods on account. On account means on credit. So sold goods on account, or in place of on account, on credit may also come, isn't it? So on account and on credit both are same. So we sold goods on credit, or you can say we sold goods on credit, $5,000. So see, here also we are selling goods on credit, and in the first transaction also we sold the goods on the credit. So what is the difference then between both the transactions? Yeah, we don't know the name. It means the goods are sold on credit basis, but we don't know the name of customer, isn't it? So in this case, see, we will use one common word for the customer. So to represent the customer, here we will use one common word, and that common word is what? Accounts receivable. This word I will use in place of customer. Now see what happened. Account receivable, in this transaction account receivable will be there. The account receivable, or you can say customer, both are same, and account receivable and customer is our what? Assets. Asset increase or decrease? Increase. And increase in asset means debit. Okay. Now we made sale also here in the second transaction. Sale is there, isn't it? And sale is my revenue. And revenue increase or decrease? Increase. And increase in revenue means credit. Now see, we have to record that entry. Now see, first I will put the date. Suppose January 5th. Now as per this analysis, we have to debit customer's account, isn't it? But we don't know the name of customer. So in place of customer's name, I will use one common word, and the common word is what? Accounts receivable. Okay, and I will credit the sales account. And what is the amount? $5,000. Understood? Yeah, if we know the name of customer, we will write the name. But if we don't know the name of customer, then one common word we will use. And what is that common word? Accounts receivable. Now come to the third transaction. What is the third transaction here? Yeah, purchase goods from Mary. So here, see, here also the name of customer, the name of supplier is here. The name, the person from whom we brought the goods, the name of that person is mentioned here, Mary. So it means we brought goods from Mary and on credit basis, because her name is mentioned here, isn't it? So it means it is credit purchase. We brought goods from her, but we will pay her later on, not now. Later on we will pay. Now tell me what happened in the business. We brought goods, it means there are expenses. We incurred the expense, isn't it? And what is the name of that expense? Purchase. We brought goods. So purchase is expense. We incurred the expense, but we didn't pay the money. So we have to pay money to whom? So we will write her name. Otherwise we will forget in future that to whom we have to pay. There are lots of persons from whom we buy goods on credit basis. So if we will not write their name, what will happen? We will forget. So that's why we need to write the name also, so that we remember to whom and how much money we need to pay. So in the third transaction, what happened? There is expense, and the name of that expense is what? Purchase. And payment we will pay later on to Mary. So we will write the name of Mary. Okay? And purchase is what? Expense. And expense increased or decreased? Increase. So increase in expense, rule says what? Debit. We will debit the expense. Now see, Mary is what? Supplier, or you can say liability. We have to pay na money in future. Mary is liability, isn't it? So liability increase or decrease? Increase. And increase in liability, what rule says? Credit. Understood? Why Mary is liability? Because we brought goods from her, we didn't pay her money, we owe money to her, isn't it? Yeah, so that's why Mary is my liability now. Okay? Now see how we will record. First I will put the date, suppose January 10. So as per analysis, we have to debit purchase account, isn't it? So I will debit the purchase account, see. So I will debit the purchase account, and now I have to credit Mary's account. Here is Mary. Now what is the amount? $2,000. Okay? Now see the next transaction. Here again same thing. In third transaction we know the name of supplier, but in the fourth transaction we don't know the name of supplier. In the fourth transaction, what is mentioned? Purchased goods on account, or you can say on credit, $10,000. It means we brought goods on credit basis, but we don't know the name of the supplier. So here we will use one common word. And what is that common word? Trade payable, or you can say accounts payable. So that common word we will use to represent that supplier. So what happened here? We incurred one expense, isn't it? What is that name of expense? Purchase. And we didn't pay the money. So there is liability, isn't it? So we have to pay the money to the supplier, but we don't know the name of supplier. So we will write accounts payable. Accounts payable. So accounts payable is our what? Liability. So expenses increased, isn't it? And liability also increased. Now what rule says? Increase in expense debit and increase in liability credit. Okay, so see the entry. So I will put the date. We assumed on that we brought goods on account on January 15. So I wrote here January 15, and as per analysis I will debit the purchase account. See here, purchase account will be debited, isn't it? Now in place of supplier's name I will write accounts payable, because I don't know the name of supplier, and put the amount. I will put the amount $10,000. So here I knew the name of supplier, Mary, so I mentioned her name, but here I don't know the name of supplier, so that's why I have to use that common word for the supplier, and that common word is what? Accounts payable. Now see, I will make the total of debit column, and same total should be of the credit column, 23,000.